Hi, I'm r.yi of iCovest Capital Group. What exactly is a reverse mortgage? So much misunderstanding surrounding this powerful loan program for seniors deserves a closer look. A traditional mortgage is referred to as a forward mortgage. As you go forward in time making payments, your loan balance decreases. By the end of the 15 or 30-year term, the balance is zero. With a reverse mortgage, as you move forward in time not making payments, the balance grows until a maturity event occurs, such as the last borrower's death, a move, or a sale. Let's talk the basics of HECM, which stands for Home Equity Conversion Mortgage, and is also called reverse mortgage. Going forward, I will refer to it as such. Now, regarding the qualifications, you must be 62 years of age. By the way, if there is a non-borrowing spouse who is younger than 62, it's not a problem. Regarding the property types you can do with the HECM, you can do a single-family home or a 2 to 4 unit home with 1 unit occupied by borrower. HUD-approved condos and manufactured homes meeting FHA requirements. Now, regarding qualifying for HECM loans, they are not FICO score driven or dependent on employment income history. They are dependent upon willingness and capacity. You don't need perfect credit either. Unlike a traditional mortgage, the principal and interest payments are voluntary. If you want to pay, but for whatever reason need to skip a month or two, no problem. You won't be foreclosed like you would be with a traditional mortgage. However, with a HECM, you are required to pay property taxes, hazard insurance, HOA dues if any, and of course regular maintenance of your home. A HECM can provide you a few options. You could receive a large lump sum of cash paid to you over a 2-year period. You could open a line of credit that will grow over time independent of your home value, which is extremely powerful. You could receive tenure or term payments from the lender similar to an annuity. Or you could do a combination of any of these options. You can also change them at any time. The cash payment, line of credit, or monthly payments you are eligible for depends upon what is referred to as principal limit factor. This is determined by your age, interest rate, and amount of equity you currently have. The current loan max with a HECM is $970,800. Now, there are jumbo reverse programs available that can go up to $4 million, but that's another topic for later. HECM is insured by FHA and it's non-recourse. This means you as borrower are not personally liable if the debt is not paid. For example, if at a maturity event your loan balance is greater than the value of your home, you and/or your heirs will not be responsible for the difference. If your heirs want to purchase the home, they would be eligible for a 5% discount of the appraised value at the time of the maturity event. Let's use simple terms to illustrate. Suppose you have a loan balance at the time of a maturity event of $130,000 and the appraised value of the home is $100,000. If you have no heirs, your estate is not on the hook for $30,000. FHA pays it. If you have heirs, they have two choices. Give the home back to the lender via deed in lieu of foreclosure, or they could purchase the home for $95,000. They would have up to 6 months to take care of this. However, there can be up to 2 3-month extensions to wrap it up. Let me pause a minute to share a very powerful story to illustrate HECM. The greatest reverse mortgage of all time is this. A woman named Jean Marie Cloumet was the oldest documented human who ever lived. She lived in France from February 1875 to August 1997. She lived 122 years. In 1965, she entered into an agreement at the age of 95 to sell her apartment to a lawyer named Mr. Raffray, who at that time was 47 years old. He agreed to pay her a monthly sum of 2,500 francs until she died, at which point he would take possession of her apartment. Now, although reverse mortgages did not exist at that time, this is actually how reverse mortgage in essence. The lawyer was betting Madame would pass quickly, and she was betting she would live a long life. Well, the numbers don't lie. He died in 1995 at the age of 77 before Madame. His widow had to continue paying her 2 additional years until her death. Mr. Raffray in total paid her for 32 years. Today's HECM loans are not so much betting against each other like the story. Both parties are actually protected. The borrower or heirs can take proceeds from the sale of the home, if any. Borrower is protected if loan balance exceeds the value of the home, and the lender is protected in the event of a deficiency through FHA insurance. I'm referring to HECMs that were originated on or after August 4, 2014 because there were improvements made to the program to add more protection to the non-borrowing spouse. If your spouse is a co-borrower to the HECM, she or he can stay after a maturity event until his or her death, a move, or a sale. A non-borrowing spouse simply means the spouse of the borrower at the time of the closing and who is not a borrower of the loan. An eligible surviving non-borrowing spouse means the spouse was named as non-borrowing spouse on the HECM, legally married at the time when the HECM closed, and remained married until the borrower's death, lived in the property at closing, and continues to live in the property as his or her principal residence. And lastly, the HECM is not in default, meaning the property taxes and hazard insurance are current. The eligible non-borrowing spouse would have to yearly submit a deferral of the due and payable status, which, assuming you have done the expected, will allow you to stay until a maturity event. Seek legal advice for further clarification. An ineligible non-borrowing spouse means a non-borrowing spouse who does not meet the qualifying attributes and requirements established by the Secretary of HUD that the non-borrowing spouse must satisfy to be eligible for the deferral of the due and payable status. Listen, I know this sounds complicated. If you have a HECM now and unsure about this regarding your own loan, I urge you to ask your loan servicer for clarity. Finally, if your HECM is older than 5 years, you may want to consider refinancing into a new HECM for one reason alone. Your home value is considerably more than when you closed, which means you may have access to more cash or credit line. The purpose of this video is to break the ice on understanding HECMs. I assume you have more questions. If you are considering a HECM to mitigate your cash flow needs or want to have a deeper discussion, I'm offering you a free 30-minute consultation now to help you better understand this extraordinary loan program to help seniors. Thank you.